Good morning, everyone. I'm Steve Kirshner, the founder and chief operating officer of IREON. On its behalf, I welcome and thank you for joining us today for today's webinar being presented by IREON's exclusive CPA firm member, Janover LLC. For 80 years, Janover has earned the reputation as a trusted advisor to their domestic and international clients. Founded in 1938, it has grown to be a top 200 member firm and is ranked one of the top mid-Atlantic accounting firms by Accounting Today. The topic of today's webinar is COVID-19, its impact on the construction and real estate industry. Since the coronavirus pandemic has plagued our personal and business lives in the last few weeks, IREON has proven to be the epitome of how the most reputable business leaders, being caring, unified friends, collectively support, help, and inspire each other to endure the unprecedented challenge, knowing that together we will overcome and ultimately enjoy a successful and prosperous future. Every member's participation in our weekly telephone conference meetings on Friday morning and the continuous sharing of important information immediately transmitted to every member throughout every day has been an essential and facet and been very beneficial. IREON is comprised of the highest caliber product and service providers serving the New York metropolitan region. All members are New York area based, with many having national and international business reach. Some members are the largest in the world in their exclusive field of service or product supplied. The New York Real Estate Journal, represented by Christine Wolf, its publishing editor, holds the exclusive category for the publication of real estate news. I now want to introduce Ken Rick, partner of Janover LLC, who will start the webinar. Thank you.
Good morning, everyone. You can go to the next slide if you want, Zach, please. Blah, blah, blah. This is our disclaimer. Next. Okay. So these are going to be the key points that we're going to cover today during today's webinar. New York needs more ventilators. The metro area real estate and construction industries need more ventilators. How do we breathe life into this industry? What are the pieces to put this puzzle together? What are the support services and legislation that will help us to overcome this coronavirus? The real estate markets have been hit with the coronavirus, the Flushing virus, the Bronx virus, and the Manhattan virus. Who do we go to for help? Obviously, we're going to be turning, and you will be turning to your attorneys, your CPAs, your bankers, and you'll also be working with your vendors to try to work through this. One of the bullets here talks about the CARES Act. The CARES Act, the payroll protection loan that most of you have applied for is just the beginning. Barry will spread a little sunshine on some of the lesser known details of the new tax relief for us. Before we move forward, let's see where we are now. Okay, Zach, if you'd like, please change the slide. Thank you. So you guys can see up on your screens these statistics. The entire dynamic between landlord and tenant has been turned upside down, and the construction industry is grinding to a halt. You see all these. Do another slide for us, Zach. Okay, there's one more on statistics, more about Manhattan, etc. The construction industry is ground to a halt. Now let's stop ourselves and really think. What can we do to best move forward and be about our future? Why worry? Let's look at some of the strategies with Chris, so we'll take it from here. Okay, so we're going to switch over. This should be your team, and Chris is going to take over. Barry, you have any comments before Chris starts his presentation about strategies?
Yeah, thanks, Ken. Hopefully a once in a lifetime situation where life and family and business is all impacted. Business owners are running businesses and they have to balance family life as well as business life, and it's very difficult. So we're all in it together, not just New York City, not just the tri-state area, the whole country as well as the whole world. And we're just going to have to put the pieces back together and hopefully bring life and business back to where it was before all this started. So today what we're trying to do is help you put those pieces together, or start putting the pieces together as much as you can with your life and as well as your business. Thanks, Ken and Chris.
Sure. Thanks, Barry, and thanks, Ken. So I'm going to talk about some business decisions and impacts that you should be going through right now. Right now, besides your family and of course your business, the three most important people in your life should be your attorney, your CPA, and your banker. These three individuals will help you get through these tough situations that lie ahead. Next slide. So as we go through some of these areas and issues that you should be looking at, you might say to yourself, this is common sense. And in fact, it really should be. If you're listening and saying that, we've done this already, or we've already looked into these things, we're actually happy of that because it shows that you're doing your job. So I'll start. I'm going to start with cash. Obviously, cash is king. A few things you should be doing right now are speaking to your bank, your lenders, to ensure that cash is available. You might want to think of refinancing or drawing down lines if possible, or other financing sources. You might look to defer payments if possible, or forbearance of any loans you have. As you'll see later on when Barry speaks about the CARES Act, there's also options you could go through there. One of the most important things is creating a budget, and make sure it's a conservative one. Without a budget, you won't have any way to properly plan to set forth the steps you'll have to take. You might also want to consider factoring your receivables. It's always an option. It might not be an option that you thought of in the past, but in times like these, it could be one of your last options to go to. Next, we have insurance. You're definitely going to want to speak to your insurance broker to analyze your policies. Potentially, business interruption coverage could cover any losses. Now, this isn't typical because typically it doesn't cover something like a virus, but this is why it just shows that it's important to analyze your policies and to always have communication with vendors. You also have your vendors who are a big part of your company. You might want to talk to them and try to exchange terms and negotiate payables if you can. Of course, your most close vendors, you're going to want to keep them close and keep them happy. You're also going to want to think about down the road. Is your supply chain going to be intact? Are the vendors you have today, will they be your vendors tomorrow? The world's going to be a different place, and the people you're dealing with now might not be the people you're dealing with in the future, unfortunately. Now, Barry, before I jump to the next slide, obviously we know cash is one of the most important things to think about. Is there anything you've been talking to your clients about to maintain cash flow?
Well, Chris, the most important thing right now is your availability to cash. And while some businesses may not have been suffering a huge cash decrease right now, as this virus continues, as businesses, non-essential businesses are continued to be closed, you're going to find that the cash will slowly be depleted. So companies and business owners have to find more creative ways just to preserve cash and keep your business afloat through these times.
Yep, thank you. All right, we'll move to the next slide. So of course you have your personnel, your employees, the livelihood of your company. As you'll see again later, the CARES Act provides some options you could take advantage of. If you cannot maintain your payroll through these times, you should be discussing with the individual options with your employees. One example is there's additional unemployment benefits out there. So even if you unfortunately can't maintain them, through the next couple of months, they have some options out there themselves. For the workers who can work and obviously off-site, remote work is extremely important. And as you go through this, you're going to want to assign roles and backup roles to ensure responsibilities of policies and procedures are always maintained. You know, people are going to be working all over the place from their houses, from remotely, maybe in the office, if you can maintain social distancing. But it's ever so important to ensure that everyone knows their role and responsibility throughout this process. One of the good impacts that might come of this is there's going to be some high-level talent out there. You know, unfortunately, some of maybe the smaller companies in your industry won't be able to hold on to these, you know, high salaried employees. So as we move forward, you might have a chance where you didn't have in the past to pick up some of these, some of this talent. Now, I mentioned remote work. You know, you're going to want to ensure that you have the capabilities to properly do this. It has to work efficiently and effectively. Technology is so important. You're going to want to make sure you have internal communication tools such as Skype or Microsoft Teams, Slack, video conferencing, also again, Teams or Zoom, just like we're doing today, and the proper hardware. The IT department is really going to be important right now. As we focus on that, you should also look at your insurance policy. You're going to want to make sure you have the proper security and cybersecurity risk covered. You know, as we move forward to the future, this just enhances that and fast forwards the risk that is out there. Remote work is also going to possibly cause a decrease in the need for office space. As we move forward, you know, companies have already started to remote work a lot of the time and let employees work from wherever they want. This pandemic is probably going to open up people's eyes to the fact that remote work actually works, and it makes a lot of employees happy. So next we have income taxes. I won't get much into this because again, as of later when Barry Sunshine goes over the income tax part, you'll see some tax relief opportunities. Okay, so now for the real estate industry, you have your tenants. Questions you've been asking is, can they pay? Will they pay? You know, for your good tenants commercially, will you grant concessions or restructure the lease agreements? You know, these are some things that you're going to have to do. As we all know, the regulations in place are always tenant friendly. You know, one thing you might consider is, could you apply security deposits to offset the loss of rent? Now, I know in New York, this isn't possible, although they've been looking for ways that could make it possible. But potentially in other states, maybe this could be done. You have all your other expenses. Obviously, you know, along with making a budget for cash, you're going to see what expenses you could cut or curtail to a later time. There are a lot of unnecessary expenses that, because you're remotely working, you probably automatically get rid of. But you really have to analyze all of your expenses and see what you don't have to pay right now or could potentially pay in the future. Now, as I mentioned before, you know, one good thing is that opportunities will come of this. You know, looking at life from an optimistic point of view, there are going to be opportunities for you and your business. You know, your business could potentially grow from this. We mentioned personnel and that there could be a high-level talent out there. There could be possible acquisitions of, you know, companies that just cannot make it through this. You might have a more positive outlook in the ability to obtain contracts because, again, competition might decrease in the future. Next slide. So now we're going to get into your current contracts and backlog of jobs. Now, before I do that, Ken, is there anything else you've been telling your clients or maybe something we didn't touch on to get them through this these tough times?
Well, some of my clients that I do some consulting with that are in the real estate industry that are landlords are aware that as part of the CARES Act, you have this payroll protection program that a lot of people have put in for and are anticipating getting some money very, very soon. A few, not too many, have actually gotten money already. And what these landlords are doing is they are communicating with their tenants that they are aware that you can put in for this. And they're saying not only should you put in for it and use this money to pay the rent, but that if you don't put in for it and you don't pay the rent, that we're going to use that against you. Nicely said, but basically saying that you didn't take advantage of what was available to you, and that's going to make us less likely to give rent concessions. So that would be an example of what people are doing to increase cash flow and leverage off the act.
Got it. Thank you, Ken. So let's get into the jobs now. So some things you should be thinking about here. Obviously, communication is ever so important these times. You want to make sure you have communication throughout with your GCs, developers, subcontractors, owners, basically anyone that you deal with on a day-to-day basis. Typically, you want to make sure you're communicating with them and everyone's on the same page. So now, before construction essentially stopped in New York, at least, you had current jobs in progress. Some of the things that you should have thought about by now are potential cost overruns, updating your estimated cost to complete, which goes back to your budget that you should have done. Even upon a return to field work, there could potentially be less of a workforce. This could cause time delays. In addition, there's going to be additional safety, health, and environmental guidelines possibly, which will all cause increasing costs. Now, your backlog, jobs you haven't started yet, you're going to want to think, will these jobs still be performed? Will you be able to perform on a timely basis? Will the suppliers and vendors you're going to use, will they be fully operational? Again, the future is going to look different. So we have to start thinking about these things now. Another possible thing you could be thinking of is alternative revenue sources. These could either be one-time deals, such as maybe selling off any inventory or materials or equipment on hand that's not going to be used in the near term, or looking at potentially other ongoing sources of revenue. For instance, service revenue, maybe something you haven't done in the past. But all these things could get you through the short term. Next.
Chris, I wanted to just comment, if I could take 1 second, on the alternative revenue. I have a client in the printing business, and their part in the business is to cut the books and the binders. They're called a bindery. And they're actually reconfigured their factory to cut those plastic masks that you see workers wearing. So, you open mind, and they found a different niche to keep themselves working.
Yeah, you always got to look for the opportunities out there, and the best businesses are the ones that could pivot as quick as possible. So continuing with the jobs, obviously you want to speak with your attorneys. One of the most important people you can talk to right now. You really have to be analyzing all your contracts you have for potential claims, deadlines, issues, any of these clauses contained in the contracts. One of the terms you might have been hearing about now is force majeure, or however you say it. But pretty much what this is, it's a clause that in an event that is beyond the reasonable control of the affected party, things might happen. It could excuse the affected party from performing the contract, excuse from a delay in the performance, or potentially terminate your contract. Now, these clauses are always written differently, so this is why you want to speak to your attorney and see what's really in those contracts. We're dealing with unions. You're going to want to speak to your representatives. They're on the front lines. They know what's happening. You want to talk about any changes that are going to happen in the future. Because again, even though we're in tough times right now, once we get back up and running, I assure you that everything's going to be run differently. Customers, you have open receivables. Are they able to pay now? Will they be able to pay in the future? These are things you might not know. You also want to talk to them about decreasing scope of any of the contracts you have going on right now. Anything to think about the future is what you want to be thinking about now. Next. So we're going to get into the assistance section of the program here. Is your help out there financially and tax-wise? Before I turn it over to Barry Sunshine, I'm just going to go over a couple of things that relate to your employees. Next. Oh, wrong way. Here we go. Okay, so there's a couple of things going on specific to your employees that you have to worry about. So the Families First Coronavirus Response Act put into place these two things here: the Emergency Family and Medical Leaves Expansion Act and the Emergency Paid Sick Leave Act. They're both effective April 1st. So the EFMLEA, what this does is it expands the FMLA if a child's school or place of care has been closed due to the coronavirus. It's typically for smaller employers and for employees that have been employed for at least 30 days. What this does is it gives everyone after 10 days paid leave to take care of their children. As you can see here, they must be paid at 2/3 their regular pay rate, which is of course capped. So what the government tried to do here is just wants to ensure parents are able to take care of their children. Because even though we have to all work, family is ever so important. Next. And then we have the EPSLA. What this does is it basically wants to let people take the time off due to the coronavirus. Often in the past, even now, people have to go to work because they feel they have to. They might not have sick leave. They might not have the ability of other cash sources. So what this act does is it provides 2 weeks of paid sick leave if the employee is subject to quarantine, per the government. Their healthcare provider advises a self-quarantine. They're experiencing symptoms and they're going to their doctor, or they're caring for an individual for the above reasons. Now, again, this is typically for smaller employees with fewer than 500 employees. It also applies to public agencies of any size. And what this does is it pays the employees at the greater of their regular pay or minimum wage rate, of course, capped. And if you're just caring for an individual or a child, it's capped at a lower rate. But at least these people that have to take care of themselves or others are taken care of in the short term. Next. With these 2 programs, there's also tax credits available for the paid leave. Essentially, there's a refundable dollar-for-dollar tax credit for wages paid under these 2 acts. The cost of providing a healthcare coverage is also included. Now, there's a couple of things here. The IRS says that employers can retain the amount of payroll taxes rather than deposit within the IRS and then receive them back. So this is just one of the ways that, although we're helping out our employees, the government's also helping out the employer. Next. So now I'm going to pass to Barry Sunshine. He's going to get involved in the CARES Act and some other assistance available. Barry, take it from here.
Thank you, Chris. One of the things that I've noticed is many businesses are working remotely. Before we even get into the EIDL, even before you get into it, businesses are trying to conduct business as best as they can, as efficient as they can. And they're working remotely, they're working from home, and so forth. What companies need to do and what they need to do is plan and make sure that they're doing their billing, they're doing their collections, all of the employees that you have, whether it be the accounting, the marketing, all of the other administrative people, all of the phones being answered. You got to make sure that a lot of people need to take a look at their business and make sure those little things are being taken care of now, and it's going to make you more efficient in the future. So those are some of the words of wisdom that I have with respect to that. But now let's get into the second phase of the CARES Act and what Congress is able to do. Could you go back one, Zach? Go back. Forward. The next, okay, so now Congress passed the 2 bills and funded some monies available for smaller businesses. These are typically available for businesses with 500 or fewer employees. This is and it's provided by the SBA, and it's called the Economic Injured Disaster Loan, the EIDL. You can actually apply through the SBA website online, and it basically gives small businesses loans up to $2 million. It depends on economic damages and your ability to repay, and there is a little bit of a process to doing that. The interest rate is at 3.75, at a max of 3.75, and there's typically personal guarantees of any amounts over $200,000. The first $10,000 is they usually advance it in advance of applying through the whole getting the full amount of the loan, but the first $10,000 that they advance immediately does not require any advance payments. Now, if you get this $10,000 and you apply for the next loan, the PPP, which we'll go on in a little bit, but if you apply for that, that $10,000 would be applied against any advances you got on the PPP loan. There's typically no restrictions on the use of the funds here, and the repayment terms of principal is up to 30 years. It's a very good opportunity for businesses to help fund for whatever injuries or lost profits that they may have. It's going to be open to many, many businesses that are what they call small businesses. Next slide. This is the one that's probably is changing this is a new program, a very brand new program sponsored by the Congress. And this is basically to give small businesses the cash injection to be able to survive. It's a $349 billion loans. And you can apply, all small business concerns and all small businesses are eligible for this program. And the amount that they can borrow, the maximum amount that they can borrow is 2.5 times their average monthly payroll costs, up to $10 million. This instead of going through the SBA, even though the SBA guarantees it, it goes through the banks, your commercial banks. This law passed a couple weeks ago and went live on Friday. Some of the major banks were not prepared for this. Some went live on Friday. Some went live on yesterday. I've heard some conversations with bankers that they're applying different rules, even within the same bank. They're applying different rules. They're requiring different paperwork. And this is creating a tremendous amount of stress on business owners. From what I hear, the SBA is listening to this and hearing this. The reason why it's creating such a tremendous amount of stress is in the recent issued Treasury guidance that came out at 8 o'clock on Thursday, the night before this program went live. They came out with a lot of rules that a lot of banks had to interpret it. And one of the questions is what happens when they have exhausted this $349 billion? They said first come, first serve. So around the whole country, there's a lot of anxiety with business owners in making sure that their applications get applied. From what I hear, the SBA is going to be giving marching orders to many, many banks to accept these loans, but it still remains to be seen on it. But it's still creating a lot of stress. So, and we're seeing it in our office. We're seeing it with clients that operate in California, New York, Connecticut, New Jersey, and all around the whole country. Basically, just to get into a little of the nuts and bolts of this is the following. Again, you could borrow up to 2.5 times your average monthly payroll costs. To show how ambiguous this is and what confusion it's causing banks, accountants, and small business owners is the SBA came out with a form. And in the form, it specifically said to use your calendar year 2019 payroll to determine your monthly payroll costs. If you look at the actual law, it is the 12-month rolling 12 months prior to getting the loan. So if the loan is available, say in April, using the rolling 12 months, it would be April 1st, 19 through March 31st of 2020. The forms don't say that. So some banks are asking companies to apply a rolling 12 months, whereas others are okay with the calendar year. But in any event, a lot of paperwork is going back and forth. I'm suggesting to my clients and businesses who are applying for this is to have all the necessary paperwork for both calculations. In addition to that, in addition to your gross payroll, your monthly payroll costs, they're allowing you to include certain state and local taxes, as well as payroll taxes, okay, as well as, or I should say, health insurance, as well as contributions to retirement plans. Now, I understand from some banks, they're limiting it to $100,000 per employee compensation. And some banks are saying $100,000 for gross payroll, health insurance, and retirement benefits. That's not my reading of the law. There's a lot of ambiguous calculations here, but my reading of it is gross wages, and anybody making more than $100,000 on a per basis is limited to $100,000, plus you add in the health insurance and the retirement benefits and any state imposed taxes on payroll. If you look at this, the 2.5 times your average monthly payroll cost, that's covering pretty much 10 weeks of your payroll cost. And what they do is they allow you to spend the money in an 8-week period once you get it. So the clock starts when you actually get the money. And you have 8 weeks to spend 10 weeks of average monthly payroll costs. So what ends up happening is you have to spend it, but they allow you to spend it. The eligible amounts that they allow you to spend it on is payroll costs, mortgage interest, rent, and utilities, okay? And the maximum amount that can go into the interest, rent, and utilities is up to 25%. And those numbers are important. So if you pay 75% or more in payroll and the balance in mortgage interest, rents, and utilities, then there's a forgivable piece. If you choose to do it, if you choose not to use it for these purposes, then it's going to turn into a loan that you're going to have to repay, and it's not eligible for the forgiveness. The good part about this program is there's no personal guarantees. So during the time there's a loan outstanding, you're not personally obligated, and it's on a non-recourse basis. The interest rate they announced is at 1%, and the principal has to be repaid within 2 years with no payments in 6 months. But there is an eligible forgiveness period in there. So the forgiveness is based on maintaining certain payroll levels for the 8 weeks. And again, as I said to you, it's on a first come, first served basis. The application process, you're going to have to work with your bank, and the bank is, hopefully the SBA gives marching orders, because this is only like the second or third day that it's open. The banks are working through this, the SBA is working through this, and the Treasury Department is working through it. So very, very complicated for the banks. This program is open on last Friday to small employers, as well as sole practitioners. On April 10th, it's open to independent contractors and self-employed individuals. And it's eligible for businesses that were operational or in business as of February 15th. So if you opened up a business after February 15th, you cannot take advantage of this program. Again, they came out with some interim guidance late Thursday night last week, and a lot of people are working to interpret this. We haven't talked about the forgiveness piece, and it's open for future guidance, and we're expecting it shortly. But let's just give a little bit of the forgiveness. So I have a client that actually submitted for $1 million of this PPP loan. So they haven't gotten the money yet, but they're expecting to get the money. From what I understand, it's going through the bank process, and they're expecting it to be approved. The bank had asked for certain payroll information. They asked for how you're going to spend the money. Different banks asked for different requirements. I have one bank that had asked for the 941s, the quarterly payroll tax returns to support the numbers. Some of them ask for you for ADP reports or payroll tax reports from other outside payroll services or in-house. So you should have those available upon request. But now the more exciting part is this. The purpose of this loan is to get small businesses a capital injection or a loan injection to get it up and running. Now, the money should be coming in shortly. So from what I hear, it's going to be coming in probably within a week or two or three of having the application approved. The SBA and the Treasury Department is working very hard with banks to making sure that this money gets on the street. In these provisions, no interest can be forgiven. So only the principal amount of the loan can be forgiven. And what happens is the forgiveness is based on a few factors. One, no more than 25% could be used for mortgage, interest, rent, and utilities, and 75% is expected or more is expected to go to payroll costs. There is a reduction that if you do not maintain your payroll or maintain your what they call the full-time equivalent number of employees, then there's a reduction of that loan amount or the reduction of the forgiveness. And what they do is they measure your full-time equivalent number of people during that 8-week period, and they compare it to either one of two bases from February 15, 2019 to February 15, 2020, or January 20th to February 29th, 2020, and they measure the number of full-time equivalents. If you have a reduction, for example, if during that 8-week period, the new period, you had 37.5 employees, and during that base period you had 50 full-time equivalent employees, then that represents a 75% reduction, so there will be a reduction in the amount of the forgiveness. In addition, there is a reduction of the forgiveness based on salary and wages. And any employee making in excess of $100,000 is excluded from that formula. So if you have a person who had a base salary of $15,000, what they use is 75% of that amount. And if that employee made $15,000 employee made the 75% of that is $11,250. If that person earned $12,000, then that person doesn't get a reduction, and that goes towards the full-time equivalent calculation. So there's some calculations. These calculations have yet been defined in the regulations. We expect regulations to come out shortly. There's a lot of difference of opinion as to once the money comes in, how to do these calculations, but we're expecting guidance shortly. This is a very exciting program. And the only way I can think of this, and the only way I can make an analogy is this. The government is giving away $350 billion. I think this is the biggest sale that I've ever seen and my wife has ever seen. So that's why it's creating a lot of stress, because again, it's a first come, first serve. And once this plan's been exhausted, then there's nothing left in there. But again, I think after we see this being exhausted, Congress may or may not come back and replenish this money. Next slide. Okay. In addition to that, there's some New York City grants for 5 or fewer employees. Unfortunately, that expired in April, last Friday. So if you didn't get into that, you're unable to do that. I don't think New York City is going to do that because they've experienced a tremendous amount of decrease in sales tax revenues. So I'm not anticipating them resurrecting this until not for a few more, maybe not for a year or two, but we don't know that for sure. In addition to that, if a business suffers their sales decrease by more than 25%, that they can get a 0% interest loan from New York City up to $75,000 to help their business get off the ground. You have to have less than 99 employees, and you have to demonstrate your ability to pay, and you have to have no outstanding tax liens or judgments against you. Next slide. In addition, the CARES Act did give a couple other companies that will not go through what they refer to as this PPP route, this payroll protection program. If you don't go through that program, there's other credits that are available to small businesses with employees under 500 employees. Okay, the first one is a credit for FICA taxes for qualified wages. So if you had a company that did not go through this and apply for this PPP amount, what they would be eligible for is get a refundable tax credit of 50% of the first $10,000 of wages paid to an employee. So that's a $5,000 credit. That's available for all employers with 100 or fewer employees, and any small business with over 100 employees but less than 500 employees. That $5,000 credit is available for any employee that's been furloughed or had their hours reduced. Again, that's open for interpretation as to what that means by having hours reduced. If somebody had their hours reduced by 40-hour week down to a 20-hour week, that probably applies. But if they had their 40-hour work week reduced to 39 hours, I'm not quite sure if that qualifies. That remains to be seen and as identified by Treasury regulations. We're expecting the Treasury Department to be working very hard to come out with this guidance, because this is a refundable credit, and this credit is available for refunds. So if you had $50,000 of credits and your payroll taxes for the quarter is only $25,000, the IRS and the Treasury Department will be issuing you a check for that difference. So it's a refundable credit. And again, there's no limit on it, except it's available for small businesses. You're able to apply it against your quarterly payroll tax returns, and you can use it to reduce your quarterly payroll tax deposits. Okay. The next item here is, and again, you're not eligible for this if you obtain one of these PPP loans. In addition to that, if you don't have your PPP loan forgiven, you're eligible for, I'll call it a deferment of your employer FICA taxes. Now that's a 6.2% FICA tax that the employer contributes to for employee salaries. Basically from March 27th until the end of the year 2020, these eligible companies are eligible to not have to pay the 6.2 FICA tax for the employer. They can use it as they wish, and basically the government's giving you an interest-free loan, and that money would be due on 50% on December 31st, 2021, and the other 50% is due on December 31st, 2022. And again, this is not available for any of those businesses that had the PPP loan forgiven. You don't know if you have it forgiven. There's got to be some guidance as to how to proceed with it, but I'm sure that this guidance is expected shortly. Next slide. Now, one of the big reliefs to businesses, because a lot of businesses have been shut down, they haven't been able to go into work, the non-essential businesses. So a lot of the company records are in the office, and a lot of companies are working remotely. A lot of people are not able to get in for tax documents. So everybody should know by now that April 15th due date has been extended to July 15th. No extensions required. It's just an automatic. It's just make it look like a substitution that instead of April 15th, it's July 15th. If any individuals or businesses are expected refunds, we're encouraging businesses to file and individuals to file now to get that refund. And they're also deferring your first quarter estimated tax payment, which is due April 15th. They're also extending gift tax returns and other non-tax gift tax returns, but they're not, I don't see an extension for the payroll tax returns, so they're still due at the end of the month. The first quarter estimated taxes for individuals is due June 15th. So it's a misnomer that you call it your second quarter estimate due June 15th, and your first quarter estimate is due July 15th. So your second quarter is due before your first quarter. So I don't know if that's a little pun that the government did, but so be it. New York State has agreed to extend it to July 15th as well. Connecticut has, New Jersey has agreed to do it to June 30th. And also New York State will waive some penalties and interest on sales tax returns if they were filed within 60 days. New York City corporate and unincorporated business tax returns. New York City is, because of the loss of their sales tax revenue, is desperately needing cash. So their returns are due on April 15th at this point, but they're allowing you, if you file by the 25th, they'll waive any interest and penalties or an extension on that date. Next slide. Now, these are some of the big things that are coming out of the new tax law of this CARE Act. Now, one of the things under this PPP program, if that client that we were talking about, the taxpayer that has $1 million of PPP proceeds, and if they use all the money in accordance with the intended plan, that full $1 million could be forgiven. And the normal tax rules of when a debt is forgiven, it becomes a taxable event. Well, under this program, this amount being forgiven is not taxable. So it's tax-free income. So this is encouraging companies to take advantage of this PPP monies, spend it on your payroll, and this payroll expense that you pay is a tax deduction. So basically, if you think about it, you got $1 million of tax-free income, and you pay payroll, rent, and utilities, and interest on the mortgages. You created tax deductions. So these tax deductions, so these businesses may be generating net operating losses. Okay, and what they did is, and there are also other reasons you'll be generating net operating losses, and we'll go into it a little bit, a couple seconds, bullets down. But if a business or an individual generates net operating losses for 2018, 19, and 20, they can now be carried back 5 years. And what that means is in 2018, you're eligible to carry back a net operating loss from 18 to 2013. In 2019, you can carry the loss back to 2014. So before this, if you had a net operating loss, you had to carry it forward, and it was only able to be, the net operating loss carry forwards were only able to be offset the next year's income up to 80% of that taxable income. So, and they removed that 80% limitation. So what I'm going to see and what I'm expecting is that in the year 2020, many companies that might have been operating at a break even with these PPP monies, and they're using it to fund payroll, are going to be generating losses that they can go back 3 years and recoup some of their prior year's taxes. Now, if you were a corporation, you can carry it back 5 years. If you are a partnership or sub S, you get to take that loss and deduct it, and it passes out to the individual owners, and those losses pass back to the individual owners. So those individual owners, those individual 1040s, we are able to carry them back on their personal income tax returns. So there's a big opportunity there. Now, in addition, there was another provision dealing with excess business losses. And these excess business losses, what that meant is if you had excess business losses of greater, for married filing joint, of business losses of $500,000 or more, then for the current year, 18 and 19, you're only able to offset your other income by $500,000. And then you would have an excess business loss carry forward to next year. So I have a lot of real estate operators that had tremendous losses in 2018. Let's say they had losses of $1 million from their rental real estate activities. They weren't able to carry it forward. They were able to deduct 500 currently, and the other 500 of excess business loss had to get carried forward. What they did for 2018 and 19 and 20 is they suspended that. And what they're allowing you to do is go back and allow you to deduct these excess business losses against your 2018, 19, or 20 income tax returns. And to the extent that those losses are greater than your income, you can carry those back. So there's a huge opportunity there. And I see that for 2020 with respect to these loans. In addition to that, the business interest expense limitation for those businesses with gross receipts in excess of $25 million and certain tax shelter, smaller tax shelter businesses that were classified as such, they were only able to deduct in 2019 and 20, they were only able to deduct 30% of your adjusted taxable income. And adjusted taxable income was basically your taxable income, and they added back your interest and depreciation and amortization. And they took 30% of that, and any of the interest expense in excess of 30% wasn't deductible. Well, for 2019 and 20, they increased that 30% cap to 50%. So that's a very big help for the rental real estate businesses out there. So that's a big provision, and that's for 2019. So if you filed your return already and you had these subject to these limitations, you're going to want to go back and amend your returns. It's not available for 18, but it's available for 19. Now, this is another big thing that's going to add to your net operating losses for maybe 2018 or create net operating losses. In 2018, effective January 1st, 2018, they're now allowing bonus depreciation on qualified improvement property. And qualified improvement property is any improvements to the interior portion of a building that is non-residential as so long as the improvements are placed in service after the building was placed in service. So a lot of retail industries, a lot of tenant improvements that needed to be depreciated over a 39-year period, they made it now 15-year period. And because it's 15-year period, they're allowing you to take bonus depreciation. Bonus depreciation is basically allowing you to expense it all in the year you placed it in service. So for example, if you had a tenant improvement that you paid $2 million for in tax year 2018, if you had been depreciated over 39 years, they're allowing you to go back, amend your return, and claim this bonus depreciation in 2018, this full $2 million on your federal return. Unfortunately, New York State doesn't accept bonus depreciation. They have so they decoupled from it. So you're going to have to go back, as well as other states who get decoupled from it as well. So you're not going to be able to get that full one-time depreciation expense for state or many state purposes. Some states allow it, but not New York State, nor Connecticut or Jersey. So you have to go back and do that. Now, procedurally, the IRS has to come out with guidance on how to do this for 2018, because certain taxpayers made certain elections not thinking that these qualified improvement property would be eligible for depreciation. So the Treasury Department is working hard, from what I understand, to come back with new rules and new guidance as to how to go back and amend the returns, whether they'll allow quick refunds and so forth. We're identifying our clients right now. You should be looking over your situation to see if you're eligible for these tax refunds. This will be a big cash infusion to your business right now, in the future, to recoup some of those big taxes that you paid in the past. And some of these things are kind of big, and you should be addressing them now, because it can definitely raise some of the big cash infusions going forward. that's what we have on. One other thing that they also came out with, because the IRS has been working remotely as well, many of the IRS collection process has been put on hold. So that's a good news for taxpayers, because if they had, if some of their tax dues were in collections or some notices have been outstanding and they feel that the government hasn't been responding to notices, they effectively put this collection process on hold, and it will work through the system. They're not getting rid of it. They're not abating that. They're not removing it. They're just putting it on hold until they can mobilize the IRS troops as well. Ken, do you have any more comments about what you're seeing with your clients right now with respect to these tax provisions?
Nothing really, because we haven't implemented the carrybacks. But just like you said, we plan, as soon as we get through the first round, which the big thing now is these PPP loans, and they get the loans and we get some of our regular tax work off the table, we're going to be starting immediately now and amending and carrying back losses to try to recoup some money based on these provisions.
Okay, next slide. First of all, on behalf of everybody at Janover and Ken, Rick, and myself, I want to thank everybody for participating in it. And Christine Wolf from the New York Real Estate Journal is joining us now to pose some questions that we have. Christine?
Hi, Barry. Hi, Ken, Chris. Thank you so much. A lot of information. That was awesome. A couple of questions were brought to my attention. One was, if I already have an SBA loan, will it impact my ability to borrow more under the economic injury disaster loan or the Paycheck Protection Plan program?
Thanks, Christine. My understanding is the maximum amount of borrowings from the SBA a company can have is $10 million. So if you are, and the maximum that you can get from the PPP is $10 million. So if you are, if you don't have any SBA loan borrowings, you're able to get that 2.5 times your average monthly payroll cost. But if you're, if you have a significant SBA borrowings, then you could run up against that $10 million cap.
Okay, so there is a cap of 10 million total between all the different programs and loans. So another question that came up was, someone said, I expected my contracting business I'm expecting my contracting business to reflect lower profits on my financials. What should I be doing now?
Barry, I could take this one. This is Chris. So obviously, like we mentioned, the biggest thing is to communicate. Talk with your lenders, the surety, bonding, your customers. Everyone knows what's going on, and this is probably going to be expected. You're also going to want to take a close look at your estimated cost to complete. You'll really be surprised if you really take a deep dive into your cost, what could potentially be cut. Now, this isn't just your job costs, G&A costs as well. In fact, we started doing this with some of our clients, considering not a lot of field work is going on. They have the time to do this, where we've been sitting down with them and analyzing their budgets, analyzing their forecasts and assisting them with ways to cut costs.
Excellent. What challenges are you seeing in the processing of the PPP loans by banks?
It's Christine, it's absolutely amazing. It went live on Friday, and many of the larger banks have not been equipped and prepared. I've seen other banks telling their customers that they're not going to be processing these PPPs, which is creating a tremendous amount of stress. And then other banks saying that you had to have, as of February 15th, you had to have a banking account as well as some form of borrowings, whether it be you're drawn upon a line of credit or not, they had to have that in existence. The SBA understands that, and they're working with the banks to try to say, guys, the banks are it's guaranteed by the SBA. So they're trying to loosen up the stringent rules of the bank, but that has to be worked through. Each bank, even within the banks, they're interpreting it differently. So what I'm doing is I'm spending a tremendous amount of time with my clients, talking to the bankers, getting the applications in. Many of these applications are submitted online through their portal, and they're asking tremendous amount of questions. And sometimes you don't even know you've answered all the questions, and then it gets rejected. So it's really a mess, and it's creating a lot of stress. And the SBA, the Treasury, and the banks really got to work hard on getting these rules in place.
Gotcha. How can I take advantage of the tax law changes for 2018? How long does it take to get my tax refund?
That's another good question. At this point, what one would have to do is, from right now under the existing rules and the administrative process, you would have to amend your 18 tax returns and carry back the losses to your 13, 14, 15 returns. And the individual's got to be able to locate those returns of 13, 14, 15, and 16, and 17, and so forth. So the first thing I'm telling people is to locate those returns and identify them. I got to believe that the IRS and the Treasury Department is going to want to get these refunds back to these small business owners who can take advantage of these carryback losses and so forth. And even larger businesses are eligible for this as well. So there's going to have to, the IRS, I expect the IRS was going to come up with some procedures and process to expedite the processing these amended returns. So it remains to be seen, but I gotta believe I'll expect guidance within 30 to 60 days. That's my guess.
Great. Does the PPP loan affect my ability to defer the payment of my payroll taxes?
Yes. Well, unfortunately, if you go the PPP route, the Payroll Protection Program route, what will happen is you'll forego the ability to get the employee retention credit and of $5,000 per employee because you applied for the loan. And if you wish to have the loan forgiven, then you won't be able to defer your employee the 6.2% FICA tax.
Okay. Couple more questions have just come in. When should I start talking to my attorney, my accountant, and my banker?
I could handle this one, Barry. Yesterday, the loan, the loans are already being processed, especially for the PPP, and there is a fear that they'll run out of money. Of course, the newspapers are saying the Treasury will subsidize it. So you really want to be working with them now. If you're a landlord, you want to be taking a look at, what you can write and send to your tenants to try to encourage them to pay rent, especially as I mentioned before, if they can get PPP loans. If you're a contractor and you're involved in contracts that you can't complete, that even the buildings themselves may be closed, you should be in touch with your attorneys and addressing all that. So yeah, yesterday.
Another one, can I collect on business interruption insurance?
Yeah, so this is Chris again. So again, you really have to talk to your insurance broker. I don't want to give a definite answer, but it's typically no. Typically it's not built for a virus, but that's not 100% of the time. It's depending on how these things are written. So it's really something you have to talk to your insurance broker about.
Okay. Can employers include themselves into the payroll calculation?
Could you repeat that again, Christine?
Can employers include themselves into the payroll calculation?
Yes.
Okay. So, okay, so if you're a sub S or a corporation and you're paying yourself salary as a W-2, yes, it is, you are included and it's capped at $100,000. Now for partners, it's unclear as to whether partner compensation would be or is considered compensation, but we believe it does because it's open to income that's subject to net for individual sole proprietors and independent contractors that's eligible for net income from self-employment. So we believe yes, it remains to be seen. And I haven't seen any banks so far reject that. So
Okay.
I'm suggesting to clients to put it in and, see what happens with that.
I think there's just one last question. So it says, I'm a small business. My rent is already higher than 25% of my payroll. If I receive the PPP and I maintain payroll, can I just apply the 25% of the payroll loan portion above paying the employees to the rent and still have the loan forgiven?
Okay, that's interesting. When the SBA came out with the form, it said that it is expected that no more than 25% goes to rent, interest, and utilities, with the balance going to payroll.
Mm-hmm.
They came out with interim guidance or interim regulations last Thursday, and they came out with a substituted form or a new form to replace the existing form, and they capped the maximum amount of 25% to rent, interest, and utilities. It doesn't say that if you paid 30% utilities and 70% to payroll, whether you'd lose the entire forgiveness amount or only 5% of it would not be forgiven. They didn't come up with that guidance. We expect some guidance on that. One person asked, when does the 8-week period begin? So when the money comes, if you apply for a PPP loan, my understanding is the 8-week period starts the day you receive the money. But again, it's open I'm expecting some guidance this week or next week, the week after, because money is going to be coming into people's banks accounts when they need it. So I think it starts on the day you receive the money.
Gotcha. Awesome. You guys have been so on the spot with getting all this information ramped up and out to everybody so quickly. I'm sure there are plenty of people who really are appreciating all this advice at this point in time.
Yeah, and
Thanks, Kristen. Thanks for the compliment.
thank you very much. If anybody else has any questions, you can send them over to Ken, Rick, or Chris, Ken, or me, and we will try our best to get to them.
Oh, I do have one more, actually. How does the fact that we are an essential business affect the PPP loan?
I don't think it affects, okay, so you have to be, I'll call it, affected by this virus. And the threshold that the law has, as well as the threshold that it's believed that the regulations state, is a very low threshold. So I think every business in New York would be affected. One person asked me and said that they can't believe that like a liquor store or a grocery store is affected because they're generating tremendous sales. And we talked about it internally, and we said, even those businesses are affected because you don't know what's going to happen in the next few months. You don't know about their companies spending a lot of time cleaning the facilities, cleaning the product, retention of employees, paying people for the Family Leave Act. So they're being adversely affected by this. So I think that the threshold is very low, and I'm having a hard time finding any business that doesn't operate, that isn't eligible for this program.
Great. Awesome. Thank you guys so much.
Yeah, it was our pleasure to participate and to be able to try to help everybody in the core group, IREON, and anybody else participating.
Yep, and thanks everybody from IREON and everybody who's been listening. I'd just say be safe and be strong, and we'll get through this. Thank you.
You're here.
Everyone.